Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Hello, and welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. My name's Mike Harrison, and as always, we're working on your financial freedom. I'm happy to be with you today. I thank you for joining me. Today's show is going to be all about deal evaluation, specifically deal evaluation as a passive investor, which is what I've been concentrating on as for my real estate portfolio for the last several years, but as a passive investor within apartment communities. So that's what today's show is about. Deal evaluation as a passive investor within apartment communities. And why? Well, this show cuts really close to home. I am looking to invest in one more deal prior to the end of 2021. And I have some specific requirements to invest in that one more deal. And I'll share those with you as we go through the show. And I'll also share with you how I'm evaluating which property to choose from. I've invested in 5 different apartment communities in the last 12 months. If I can get one more in, that'll make 6 in just the last 12 months. How great is that? It's been a very strong year for me for the passive investing side of my real estate portfolio. But before I dive into this passive deal evaluation, I think I have some explaining to do in regards to any new listeners that we have out there, any new real estate investors that we have out there, any new Lifestyles Unlimited members. I need to explain what a passive investor is. I need to explain what this deal looks like, how it's put together, how this whole conglomerate where we get together and pool our money works to invest in these apartment communities. I'm a real estate investor here in Dallas-Fort Worth. I started investing in 2011. I joined Lifestyles Unlimited in 2013. I own several single-family homes, and I'm a partner in over 2,700 doors of real estate within various apartment communities through those passive investment opportunities. It is those apartment deals that I'll be discussing today. And I made that change from single-family investing to investing in apartment communities in 2018. It was a conscious effort on my end to change my strategy, to move forward, to change the game, to kind of reinvent yourself. And that's another thing for you real estate investors that are new. You're going to find that as you continue along this path, you are going to reinvent yourself. You're going to reinvent your strategy every few years. And you need to do that. You need to break it down and build it up and grow it. You're almost going to take one step backwards to take 2 to 3 to 4 to 5 steps forward. And that's just how real estate investing is, to continue and growing along that path and building that cash flow snowball that I speak about so often. So yes, I've had an incredibly strong last 2 years, but the beauty is that the momentum continues to grow each and every year, faster and faster and faster. That's the way these investments work. They're a little different than going out and buying a home and renting that home to a great resident. It's all under the umbrella of real estate investing. It's just a little different than single-family homes. These investments that I'm going to speak of today, this evaluation, these are essentially real estate syndications. And the way they work is a deal sponsor. Here at Lifestyles Unlimited, we will use the term lead investor, but it's a deal sponsor is what it is. Well, this person will go out and identify a specific business opportunity. A specific business opportunity. That business opportunity just happens to be an apartment community. And this apartment community can be purchased and managed and run in such a way that the business is profitable. And if the business is profitable upon purchase, well, then this lead investor, this deal sponsor, this person will have identified other areas to make the deal better. Maybe it's profitable, but it's just not as profitable as it could be. Maybe it's just not as effective as it could be. Maybe it needs to be repositioned. There's many, many different ways to make a property or a business better, but the lead investor they're going to share that with you. But this lead investor is going to need some help raising the desired amount of capital to purchase this business. So the lead investor essentially goes out and says to people like me as a group, hey, if you like this deal, let me know, and together we will pool our money and purchase this business opportunity, this apartment community. Then the next step is the lead investor will purchase it and run this business. And each quarter, the lead investor will pay to the other passive investors, me, for instance, that pooled their money. They will pay to those passive investors quarterly a dividend of the profits that were generated during that previous quarter of the business. Now, that's a very general 40,000-foot flyover basic overview of what we're doing. Obviously, the details are much deeper, much more specific. But in a nutshell, that's essentially how these deals work. And I refer to myself as a passive investor in these deals. And let me explain what a passive investor is. It is exactly that. We have no say in the business operations or the day-to-day activities of that business. That is by design. However, it is also a requirement by the Securities and Exchange Commission. It is a law. It is part of the regulations overseeing how these businesses are structured. Okay, the passive investor has no say in it whatsoever. In fact, if you were to look up passive investing, you would see the definition is that you simply means you invest your money in a real estate deal, but you're not involved in any way in the management or operation of the property. Instead, you pay others to manage things for you. That's the lead investor, aka the deal sponsor. If you were involved, you would be an active investor, and that's completely different. So now that I've shared with you what passive investing looks like, what a passive investor is, we will move forward with the rest of the show. I hope you can stick with me because I want to share with you exactly how I look at these various deals, make sure they're the right deal for me, and then further evaluate which one am I going to choose, because I only have enough capital right now to get in one deal, even though I'd like to get in several deals. My name is Mike Harrison. This is the Lifestyles Unlimited Real Estate Investor Radio Show. We'll be right back.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. My name's Mike Harrison. I appreciate you joining me today. We're talking all about deal evaluation, specifically within apartment communities, and how I will look at some of these deals and evaluate them and break them down and decide which one works for me. And I'm doing this because I need to get in one more deal before the end of the year. One more right deal for me. And let me say this, the right deal for me may not be the right deal for you. Okay. I have my reasons. Other folks will have their reasons. Other folks will have their reasons. The timing may change the reasoning for the deal. There's so many different levels and layers to this, and I hope to break through a lot of those layers today. And if you have any questions at all, or if you're just now catching me, reach out to me. My email is askmike@luinc.com. askmike@luinc.com. I do respond personally to each and every email that I get. There are plenty of reasons to invest, and thanks to the locality and uniqueness of real estate, essentially no two deals are alike. They may be structured similarly. They may be set up as a business similarly. There might be several yield plays, for instance, or several hybrid deals, for instance, or several value plays, for instance. But really, when you boil it down, real estate is so local and so unique that each of these deals, neither of them is alike. There's no twins, essentially, in investing in these apartment communities. You may look at trends that are the same, and you can look at historical data and education with that, and that's what we do, is we share with others in our community. We learn, we educate ourselves. we set these deals up and we can predict how they're going to perform, but they still are very unique. Now, I want to get in one more deal before the end of the year. Me personally, I have two requirements that I'm looking for right now. One, I want cost segregation, which means I want some serious depreciation on the front end of this property. Why? Because I have some capital gains that have happened this year, and I'm going to try to offset those a little further. Now, where I'm going is cost segregation is a useful tax strategy. It essentially allows real estate investors who've acquired, built, or purchased land or real property to reduce their taxable income by having a cost segregation study or segregation analysis completed on the property. Essentially, we're going to speed up depreciation and take more of it on the front and less of it on the back, okay? And when you invest in these properties, when you become a passive investor, a part owner of the property, you get essentially what's called a K1. And the K1, when you file your taxes, it'll show you in one column how much you were paid by the property, how much your dividends were. Let's say you made $5,000 that year, and then how much your losses were, your depreciation losses. They're phantom losses, but it's a business, so you get to depreciate it. And your losses may be $20,000. They may be $30,000. Again, every deal is unique, but is this a beautiful country or what? Is that on one hand, we can get paid tax-free income, but on the other hand, we can show a business loss. Again, on the front end, we're allowed to take a heavier depreciation. That's cost segregation. So I'm looking for cost segregation. So I really want to offset as much of that capital gain as I can. And therefore, my second requirement is that I need to close before the end of the year. So I know I'm not going to get paid on the apartment community, but I will get that K1 with that depreciation in it, and I'm going to file that with my taxes. So that's what I'm looking for. As soon as January 1st hits and I get into 2022, I'm going to have a completely different set of criteria that I utilize to essentially ascertain these apartment communities that I want to invest in. And these deals come across. I've looked at, my gosh, probably 10 to 12 different opportunities. There's several that haven't fully come out, but they are coming out. So the lead investors let us know, but at least 10 to 12. And then I've boiled that down to about 5 that look really great. 5 that I'm looking at and saying, yes, I'd like to be a part of every one of these. Now you may be saying, Harrison, well, why don't you just invest in every one of those? Well, I don't have enough capital to get into all of those right now. I've accrued enough to get into one deal before the end of the year. And so I've had to kind of, essentially what I've done is I've created a spreadsheet to help me, okay? The spreadsheet that I can input some of these items on each deal of these 5 deals, and then I can further look at it and boil it down and say, bingo, there's the deal that I'm going to invest in. And it's really at a glance. I like spreadsheets. I'm very visual. If you want a copy of this spreadsheet, I'm happy to share it with you. Send me an email, askmike@luinc.com, askmike@luinc.com. I want you to understand, this is very rough. It's very raw. This spreadsheet's evolving. It has not been perfected. If you're an Excel guru, reach out to me if you want to see this spreadsheet. But I want you to make improvements. If you're like, Harrison, why don't we should be looking at this, or we should add this, or we should take this out, or change this category, or what have you. Ultimately, I'd like to assign a points system to some of these categories so that we can score the property. And you can look at the bottom of the spreadsheet, and then you can say, well, the high number wins or the low number wins. However we do that, I don't know. So it's a raw spreadsheet. I'm happy to share it with you. Reach out to me. Now, the other thing I need you to understand, this spreadsheet is not to be used to evaluate any investment, whether it's a good opportunity for you to invest in. That's not what this spreadsheet's for. That's what a private placement memorandum is for. And we teach you how to evaluate that properly at Lifestyles Unlimited. The private placement memorandum, the PPM, it's a large document, and it will contain all the information you need to decide if an investment suits your objectives. Let me say that again. The PPM contains the information you need to to decide if an investment suits your objectives. And I will do a show, when I was creating this show, I will do a show in December, and I'm going to go through exactly what's in a PPM. This spreadsheet for me, I've gone through 10 or 12 PPMs. I've identified 5 properties. All of them I like. I'd like to get in each one, but I need further analysis so I can say, here's the one we're going to invest in. And so it's just a quick little spreadsheet. I put it together. So that's really what it is. It's just kind of tightening it up for me on a mental basis, okay? The spreadsheets are great. They're at a glance. It also kind of keeps you fresh on what each property is and that sort of thing. Within this spreadsheet, I've identified 45 different metrics. 45 different metrics on these properties. 5 different categories. And I'm going to try to go through those for the second half of the show. 45 different metrics, 5 different categories. The 5 categories are deal metrics. That's the property itself. Tell me about the property. The second one, obviously, is the financial aspects. The third is, let's look at the lead. Let's take a deep dive. Fourth is maintenance. Fifth is incidentals, my favorite category. We'll be right back. My name is Mike Harrison. This is the Lifestyles Unlimited Real Estate Investor Radio Show.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. My name's Mike Harrison, and as always, we're working on your financial freedom. I appreciate you tuning in. I'm talking about apartment community deal evaluation as a passive investor on today's show. And if you missed the first half of it, you can always find us at the Lifestyles Unlimited website. Go to lifestylesunlimited.com, click on the radio button. You'll find all the radio shows there, my show, the great Dale Walmsley himself, his shows are there, Andy Webb, David Ruzicka, Colonel Al Gordon. All of our shows are there. If you want to boil that down further, if you scroll all the way to the bottom of the screen, there is a search bar at the bottom right. Type in whatever you're looking for. Cash Flow Snowball, for instance, or Mike Harrison or Andy Webb. And then it will filter all of the radio shows. And we have, I think, 10 years worth of radio shows on there. It's unbelievable. But you can filter it out via that form. Maybe you got a question about taxes, for instance. Boom, type in tax and you'll get tax shows or credit or whatever you're interested in. You can find there at the Lifestyles Unlimited website. Download us on your favorite podcast app on your smartphone. Listen to us in your spare time. And you can always go to YouTube. We have our own Lifestyles Unlimited channel on YouTube. If you go to YouTube and type in Dale Walmsley, you'll find those shows there. So my spreadsheet that I created, and I created it because it hits close to home. I've got enough to get in one more deal before the end of the year, which would just, it'd be a cherry on top. Now we're running out of a runway, so to speak. We've only got 5 or 6 weeks before the end of the year, so I've got to get busy. There are plenty of opportunities out there. These lead investors send those opportunities out. I'm on several of their passive investor lists. They come across and I evaluate them. Yes, this deal's for me. No, this deal's not for me, etc. And I find a select group of these deals that I want to get into. Keep in mind, I only have enough funds to get into one. And so I created this passive deal comparison tool, very simple Excel spreadsheet. I'm sure some of you Excel gurus out there can look at this sheet and expand further on it, and I invite you to do so. I'm happy to share this spreadsheet with you. But I created 5 different categories and 45 different metrics to measure. First category, deal metrics. That's the basics about the property. What's the property? Second's the financials. Very important. That's why we're investing, right? We invest to make money. So that's probably the most important side of it. Lead investor. Not to be left undone. Let's dig in a little bit on the lead. Let's learn a little bit about this lead. They are, after all, the ones that are going to be running this business. Don't we want to know something about this person? We do know them, obviously, because we're on their passive investor list. Let's go a little deeper and look at it in that regard. Maintenance, property conditions. What are some of the construction methods, materials, exterior concerns you may have? And then incidentals. And that's my favorite category. It's really the most ambiguous. We'll go through that. That'll be right at the end of the show, so you'll want to stick with me. Honestly, this category may or may not affect the deal, but for me personally, it really helps me paint a more complete picture in my mind of what this community is. So the passive deal comparison tool, imagine a spreadsheet and you've got these different aspects of the deal. You want to answer the question down the left side, and then you've got columns. Column number one, let's call it apartment number one, and then underneath it you will name who the lead is. And so for me, and I'm going to go through two deals. I'm not going to give it away. These are real live deals right now. I'm not going to give you the name and I'm not going to give you the lead, but I will give you some of the metrics on it as we do these comparisons. So I've got apartment number one, husband and wife team, lead team number one. Then I have apartment number two and I have husband and wife lead team number two. So my deal metrics, first one is age. What year was this built? My apartment number one, 1971. Apartment number two, 1965. Location. Why is this important? Well, you may be heavily invested in Texas, and you may say, I need to invest outside of Texas. I may be looking at Atlanta. I may be looking at Indianapolis. I may be looking at Phoenix, Arizona, or anywhere in Arizona. Great market right now, by the way. So you want to, at a glance, you can see the market. So property number one is here in Dallas-Fort Worth. Property number two is in South Texas. My third metric is, what is the market? Is it a primary, secondary, or tertiary market? Property number one, I have primary. Property number two, I have it's a secondary market. My fourth deal metric is deal type. Is this a yield, a hybrid, or a value play? And I'm not going to define those. Send me an email. There are shows that will define those for you. Apartment community number one is a yield, and I have in parenthesis with minor hybrid component. Property number two is a straight up hybrid. Okay, it's a tweener. It's part yield, part value. Unit mix. Property number one, I put okay. 2/3 of this property are one bedroom apartments. This is not to make or break a deal. That could very well be perfect for the locale of this community. Again, this is just a spreadsheet for me at a glance. I've already made my decision through the PPM that I would be happy to invest in either one of these deals. I'm just kind of listening this out. Unit mix for property number two, I wrote healthy division of 1, 2, and 3 bedrooms. How many units? Property 1's 244, property 2's 152. Class. What is this class of this apartment community? Is it an A, a B, or a C? Both of these properties are Class C properties. And then lastly, under deal metrics, do I have investments nearby or in the proximity? Property number one, yes, I own single-family homes in the same city as this property. Property number two, no. But I do put, this is a city I have not invested in, but I lived there a long time ago. I know this city very intimately. Lived there for a few years, so I know where this property is. I know where it's situated. I understand the dynamics of the location of this property very well. So continuing on the spreadsheet, we get to the next category, the financials. The important side of it, right? The meat, the guts. This is what we're looking for in a property. So under financials, I have, and I'll just go through the metrics. I have business plan, lead compensation, cash flow day one, performance plan, cash on cash, performance plan annualized, refi plan, first dividend plan, agency lending day one, unit cost, cap rate, cost segregation, interest only lending. These are questions I want to answer. They're all within the PPM. They're shared with us by the lead, typically in a webinar. We get together and watch a webinar on the property opportunity. As I'm watching those webinars, I'm filling in the blanks on this property. So the business plan for property one is a 6-year hold with a refi in year 3. Property number 2 is a 5-year hold with a refi in year 3. Lead compensation, property 1, 20%. Lead compensation on property 2, 10%. Will this property cash flow on day one? Both of these properties, yes, they're profitable now. What is the performance plan, cash on cash? Property number 1, 5 to 7% cash on cash. That's each year. Property 2 is a 6 to 9% cash on cash. Those are very similar numbers when you look at it as a whole. Performance plan annualized. Property 1 is at 20%. Property 2, 14 to 18%. Those are different because each lead is projecting different returns on their refinance. Okay, they're projecting different returns. So the refi plan, I have this as a separate blank, even though I mentioned it earlier, but we go a little deeper. Property 1 is year 3, a 65% refi. Property 2, year 3 is a 30% refi. First dividend plan. What does that mean? Well, when is the passive investor going to get paid? Property 1, the lead has it projected as the first quarter after a 2-quarter hold. So they're going to hold it for 6 months essentially, and then they're going to pay based on that following quarter. The second property is going to do the exact same thing. Now, why would a lead investor do that? Well, they do that because essentially they need to season. They purchase the property, they're going to put new management in, they're going to start on their CapEx program. So they need those 6 months to kind of get the ball rolling, so to speak, without having to pay out those dividends, and then they can move forward after those 6 months. My name's Mike Harrison. We'll be right back.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. My name is Mike Harrison. We're talking passive investor deal evaluation or passive investment deal evaluation. I've created a spreadsheet to help me choose a property to invest in, and I'm just going through the metrics. I've got about 45 metrics that I like to look at a glance. Again, I got all this information from the private placement memorandums that were sent to me by lead investors and also through their webinar. They have a webinar where they share the business opportunity with said passive investors, and then we can decide whether to move forward on these properties. And I've got 5 different metrics. I'm in the middle of the second metric, which is really the financials. And I've got a few more items here. Unit cost, and that's what, when you essentially divide the amount of apartments into the community, what each cost is. And this property 1 is at $103,000 per unit. Property 2 is at $85,000 per unit. Cap rate, yes, that's important. Both of these properties are just under a 6 on the cap rate. Cost segregation, if you caught my earlier segments, this is one of the big items why I want to invest before the end of the year. I want some serious cost segregation. I want that depreciation to help offset some capital gains. Both of these are doing cost segregation. And then interest-only lending. Again, neither of these are deal breakers, but it just helps you further evaluate these properties at a glance. Property 1, no. Property 2, yes, initially. All right, the next segment of metrics that we want to look at when we analyze these deals, I have the lead, and this is so important. This is the jockey riding the horse. I have learned in this business the lead really is, in my opinion, more important than the property. More important than the property. Does that mean I won't invest with a new lead? No, I invest with new leads all the time. But the lead really, you've got to look at this lead and understand that this lead has the capabilities to run this business. So I'm not giving the names of the lead on these properties. Sorry. I'm keeping this as anonymous as possible. But my next question is would I have dinner with this lead? Would I have dinner with this lead? And this I got from a super passive, and her name is Bethany. And she was on the show about a year ago, and we were talking about various leads. And that was one of her criteria, is would you have dinner with this lead? And I thought about that, and I said, there's so much more in that than just having dinner. It's what kind of person is this lead? I've got yes for both of these leads. My next category, lead experience. How many deals are these leads in? Lead reputation. So lead reputation, you may have well-respected, this may be their 10th deal, and you may have new investor. So put that in there, put that then in the blank, and that'll give you an idea. And then next I have, who is the KP? Who's the key principal? Tell me a little bit about the key principal. Well, both the key principals in these two deals are very well respected and very experienced. So it's kind of a tie there. Does the lead live in the vicinity of the property? Yes or no? Why would that be important? It's not a deal breaker by any means. Well, it'd be important because the lead is running this business. So then I followed that question up with, does the lead have time to run the deal? That's a simple yes or no, and it needs to be a yes. But think about that as you go through. Is this lead employed? Do they have a second job, or are they retired where they have the time to run this deal? Another one of my very, very favorite deal metrics. How much money does the lead have in the deal? How much money does the lead have in the deal? That's important. If this is a new or newer investor and they've got a big stake in it, don't you think they're going to take care of that golden goose and nurse that golden goose back to health and take care of it so those golden eggs pop out? Absolutely. Is the fact that one lead may only have $100,000 in a deal and another lead have $300,000 in a deal, does that make a difference in how the deal is run? No, they both want to succeed. They're both educated, but it's just at a glance, something to think about. I would tell you this, make sure that any deal you invest in, that lead is putting some of their own money in the deal. There are folks outside of Lifestyles Unlimited all the time that put these syndications together, and the people that are running them don't have one red cent in the entire deal. For me, that's a no. That's a red flag. I'm not playing that game. I have this question on here. Have I invested with this lead before? So that may be a yes, a no, and it may be a no, but I really want to. And then who is the mentor? And here at Lifestyles Unlimited, all of our leads have mentors. Just kind of nice to see who that person is. On this second deal, it just so happens that the mentor of this lead owns properties in the same vicinity, in the same city. Don't you think that would be important? Don't you think that would help the deal perform? You know it would. The next category I have is maintenance and property conditions. This is really just for me. Again, everybody's got their own set of criteria, but I'm going to ask this question first. Is this property a flood, a hail, or a hurricane risk? Look, if you have a property in Texas, you're at a hail risk, okay? You're going to get that. Oklahoma, Kansas, same thing. It just hails in this hail belt, this part of the country. But is this property near the coast, for instance? It might be at a hurricane risk. Again, not a deal breaker. They're going to be insured, but just something to look at because we're getting down to the nitty gritty. We're trying to fine tune it. We'd like to invest in, let's say, both of these properties, but we only have enough to invest in one. So we got to get down to these minute points. Here's a big one for me. Is this what they call an EIFS, EIFS, which is kind of an artificial stucco or a stucco over styrofoam, and it failed horribly. There's still some properties out there that have EIFS. I want to answer that question. If it's a stucco exterior, I want to make sure it's a hard coat stucco exterior. Just again, it's a potential maintenance issue, something to look at. Flat roofs. Flat roofs are bigger maintenance issues than steep slope roofs, than shingle roofs. So does it have a flat roof? Yes or no? If it does, how old is that flat roof? What kind of flat roof? Is it TPO or is it modified? Different roofs perform differently. Again, big maintenance issue. Mansard roof, same kind of deal. Something to think about. Typically, mansards can be a lot of issues, especially an old mansard. If it is a mansard, what's the material? One of these properties actually has mansard roofs, and it's got steel on it on the outside. So the mansards have been redone. Boy, that's well done. That's not going to be a concern. Does this property have a boiler or a chiller? Yes or no? Again, maintenance issues. That's this category, maintenance and property conditions. What's the exterior condition? Is it good? Is it bad? Is it poor? I promise you the lead has addressed the exterior conditions within the private placement memorandum, within their business plan, within the CapEx if it needs it. Just again, at a glance. And then is there deferred maintenance? That might be good. If there's deferred maintenance, that's probably a business opportunity. Think about it. If a bunch of folks are living in an apartment community and it's falling apart and it has deferred maintenance, and a great lead investor from Lifestyles Unlimited comes in and takes over that property and fixes everything and makes it look nice and does the landscaping and makes it run well, chances are those residents of that apartment community are going to be happier and be happy to pay a little more rent. So deferred maintenance could be a good thing. But again, just something to note. Now, this last category, my favorite category, I just call this incidentals. And again, I know this spreadsheet's going to grow and evolve, and there's a lot more that probably should be in here, and how we can get that information in. We're just going to have to play with it and see what works and what doesn't work. But one of the incidentals I have is this in a growing market, or rate the market essentially of growth. And so for this property number one, I've got rapid growth. And for property number two, I've got medium growth. They're different markets. Close date. If you listen to my show in the entirety, that was really important to me. I want to close before 2021. So I'm eliminating any deals right now that are not closing prior to 2021. So yes or no for me, yes, these are closing end of year prior to 2021. Surrounding areas in proximity. And what I'm looking for is, and you can get on Google Earth and kind of look at it. What's around there? Is there a big industrial yard next to it, or is there a school next to it? Is there 20 other apartment communities next to it? That means that the lead's going to have to do their homework on the market, and I'm sure they have. So just a blank, you can fill it in with your own notes. Crime in area. It's not necessarily a yes or no question, but it's something to consider. Is it a heavy crime area? But again, that may be part of the deal. If there's a lot of crime in the area, maybe this is a deep value play and we're repositioning this property. Again, something just to look at a glance. You may just fill that blank in with unknown, and you can always reach out to the lead investor and say, hey, what's the crime situation in the area? Sometimes the lead investor will say, hey, we have on-site security, or there is some heavy crime, and here's what we're doing to mitigate that. We may be putting in a heavy-duty camera system and monitoring that system, or maybe there isn't on-site security, or maybe their plans are to provide some discounts to some local police enforcement officers or something along those lines. There's all kinds of things that could be done. Bonus items. Is there storage, acreage, that sort of thing? Recreation nearby. Any future add-ons? Something to think about. So, my friends, I've got a ton of items in that spreadsheet. I hope you got a little bit out of it. But I always want you to remember, we have so much fun doing this, but it's not the money. It's the lifestyle. My name's Mike Harrison. See you next week. Make it a great day.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.